866.
CitiGroup sees oil falling despite OPEC efforts to prop near $80. Oil prices are likely to fall below $80 a barrel, even with OPEC's recent efforts to support that level with unexpected cuts, according to Ed Morse, global head of commodities research at CitiGroup. China's long-awaited recovery has been slower than expected, while the prospect of economic slowdowns in the West is crippling demand, he said. Quote, "We're waiting to see what's really happening with the economy, but it is a slow recovery," unquote, said Morse in an interview with Bloomberg Television. If anything, that will be an end-of-the-year phenomenon, is what his last quote was.
Yeah, this story is so interesting, Richard, because they cut prices. It was this quote-unquote surprise we discussed last week, and then all of a sudden, oil doesn't go up that much. It's still, what, $85 a barrel?
Yeah, 86.
Depending.
It bounced and then it didn't. Yeah.
Yeah, I mean, the reality is that OPEC isn't all of oil production. It's a swing producer. It's a swing cartel. But increasingly, these smaller players that are not in OPEC are, like the U.S., are increasing production and filling in. I mean, it's not total control they have over the market. So when they throttle back production, oil price goes up, but not as if they're in total control of it. I think it's very interesting. I mean, this goes back to September, Richard, and we've talked about this on this podcast as well. That was shocking. And everybody was like, wait a minute, we're just getting oil prices to be at a reasonable number and inflation's a little bit out of control. What's going on with this decision? And it turned out to be, it didn't send oil to $150. It didn't freak out markets. It did briefly. And then the price sort of settled in. So,
yeah, I mean, since November, essentially last year, the price has been between 75 and 86, and stayed within that band. And I think the Saudis would like it higher, but we can't complain too much about it. I mean, and as this article goes on, it's good. It's part of the issue is not only a global economy that's sort of sputtering, but you have production growth coming out of Iraq and Venezuela, and projections for non-OPEC liquid fuels production to go up in 2023 and again in 2024. So the response, which was muted, at least by the administration, U.S. administration, in response to the last production cut, was muted. Obviously there was a lot of talking heads, but it really hasn't impacted it. And it's got to be a little concerning to Saudi Arabia. Saudi Arabia really needs, Fitch updated recently. We did a segment 2 weeks ago on Fitch's, updating sovereign debt from A to A plus. But they talked about the break-even point has gone from, I think is now at 76. But that doesn't include a lot of expenses that Saudi Arabia is taking on, including a lot of their giga projects. So Saudi Arabia needs elevated oil prices in order to conduct its economic projects. So, we've got a bit of a loggerheads, and maybe Saudi Arabia has to go lower if they want to get the price higher. That might be problematic, but
yeah.
So a lot of sound and fury, but not a lot of change in the oil price.
Yeah. They cut production by 1 million barrels between all of OPEC plus. Saudi Arabia accounts for half of that. So although they want higher oil prices, they're also willing to shoulder the burden of cutting back half of the total production of OPEC, which is more than its fair share, I think. I also saw this quote, Richard, from Energy Secretary Jennifer Granholm, who said that higher gasoline prices could hinder efforts to roll out greener alternatives. That doesn't make sense at all. High oil prices should help efforts to embrace battery-powered cars and non-oil powered machines. So I don't know what that was, but
I think yes, in terms of adoption, but I think in terms of corporates, they're if they think there's long-term profits to be made, they're more likely to invest.
Mm-hmm. Okay.
And this is weird. I wouldn't want to be an energy forecaster now, because you've got all these unknowns, specifically capital investment in fossil fuels. And that's what the Saudis are trying to figure out too. Everybody's trying to figure out what's the capacity going to be, how much of this, we're in a global energy transition that people sort of trumpeted and wanted to move to long before we were prepared to do so. Yet it's coming anyway. So what are investment trends going to look like? And and Saudi Arabia is looking at, all right, if everybody's moving away from fossil fuels, we're still going to be strongly into it, and they're increasing their capacity to another million barrels per day, I think by 2026. So they recognize there's going to be demand for another, going into the future. But are they the only ones? Are others going to be demand, investing? If you're a corporate, do you invest? What's your long-term horizon? I mean, can you make money doing this anymore? And geez, how do you predict any of this?
That's such a good point. And Bloomberg had a piece about that this week. The
Yeah,
Saudi calls them, and OPEC's always called them speculators, sort of like diminishing or putting down their profession. They're traders, they're trying to make
right.
money on the margins, but they see it as these guys are betting against us, and we're going to teach them a lesson. And this piece in Bloomberg was, the quote, the first paragraph: the surprise OPEC Plus production cut was aimed squarely at one audience: speculators betting that oil prices would fall. Um, yeah, Prince Abdulaziz bin Salman in 2020 said, "quote the guys on the trading floors, he wants them to be as jumpy as possible," which is just what you were talking about. Because I mean, you're jumpy if you have no idea what's going on. You're like, what do we do? I mean,
But
yeah,
but we have to remember from the Saudi perspective too. They're not, the energy for security uh, framework that everyone says we're moving past, and we are in terms of U.S. and Saudi Arabia. The supposition there was that the U.S. expresses a preference in Saudi jumps, yeah, and OPEC jumps, but Saudi in particular because it's an ally. That's not always been the case, but from Saudi Arabia's perspective now, in terms of being receptive to, say, an American request for consideration on oil policy, they're going to go, look, for starters, the EU has put a price cap on energy, which is something we really don't want to see. Number two, you just significantly manipulated the market by withdrawing millions and millions of barrels from your strategic petroleum reserve. I mean, why, if we're trying to preserve our economic well-being, should we be responsible to you at all? You're not responsive to us. Essentially, you're doing things that undercut everything we do. So we're just not going to have it. We're going to do what was our own interest. The problem is how much control does OPEC have ultimately? I mean, they can go draconian and cut everything, but that is not something that's worked out for them in the past. And so trying to find a balance, trying to find a band here that works for everybody is exceptionally difficult. And again, like I said, in this environment, doubly so.
yeah, it's a good point. And it boils down to the basic supply demand. There's so many angles to this, but if the economy slows, there's going to be less oil consumed. I mean, it's tough too for Saudi, right? I mean, as I mentioned earlier, if they're cutting 500,000 barrels a day, is that I mean, that's a lot of money. That's $500,000 a barrel. 500,000 barrels times $85. It's not insignificant.
No, and
I mean,
especially if there's not a significant jump in oil prices to offset the reduced volume.
right.
And then we throw in too, Russia's selling significant amounts of its oil at a discount. It's I hate, like I said, I would not want to be trying to project anything in this environment.
Yeah. It's always been sort of a tough field. And I feel like since COVID, when it hit negative $38 on the West Texas Intermediate, I feel like it's been wild. And remember, it was the Saudi Russia conflict. And it was 2021 when Saudi Arabia and Russia sort of went head to head, and they started
2020.
2020. Okay. So, man, it's a complex
And that's the other
market.
thing. Where is U.S. shale? I mean, U.S. shale has typically been extreme, up to 2018 or 2018 or so. U.S. shale was going a mile a minute, taking on debt, just producing quickly and at great volumes. And now they're much more sober, much more restrained. They just had a good month last year in terms of new drilling, but they're not going to blow it out and be a loss leader at certain levels of crude prices. They're going to have to pay dividends to their investors, and they have to be responsible in terms of their long-term commitments. So they're no longer a super active player at the top of mind for Saudi Arabia, although Saudi Arabia and OPEC considers everybody in the field. But yeah, I'm just saying, like I said, it's just all these variables that used to be, are changing. And again, what does the energy transition forebode? It's just insane.